Hi there. Just the 10-minute summary for the risk topic for the exam. And I just hope that it will help and summarize everything for you. So look, at this stage, you know exactly what to expect. There is the first question on the exam paper will be a profit and loss account. The second question will be the ratios and analyzing accounts. And then the other questions Angelina has gone through with you. So just pick your areas that you're comfortable with and work on them. So just to reiterate for the umpteenth time, on question one, you get a trial balance. Now, the trial balance is where you extract the figures from the accounts. They're the numbers that have been recorded in the accounts. And when you're preparing a profit and loss account, what you are working out from the figures, if the company made a profit or a loss for the period in question. So it's just for the 12 months ending the 31st of December or whatever the financial year end is. So if you understand that, hopefully that will make the adjustments and what you adjust and why you adjust it an awful lot easier. So you've extracted the figures from the accounts into the trial balance. You've been given those numbers and you've also been given some notes. So for example, on your prepayment, so it's telling you that in the mock exam, you paid insurance of 8,000 on the 1st of July. So that 8,000 came out of the account, it's paid, it's done, it's gone. So it's right that it is accounted for. However, because the year runs from the 1st of July to the 30th of June, so that's the period of insurance you paid for. So it'd be wrong to take that full 8,000 and put it into this year's expenses because the expense doesn't relate to this year. So on that basis, this is why we do the adjustments. We're saying, okay, we paid 8 grand on insurance. 4 of that relates to this year. 4 of that relates to next year. So on that basis, we take the 4,000 into this year's expenses and calculate our profit on that basis. And the other 4,000 we record as a prepayment in the balance sheet. So that's what we're doing. Similarly with depreciation, we have the depreciation figure in terms of what we've depreciated the assets up to now. And now another year has rolled on, so they're going to depreciate even further. So it'll tell you what the percentage, we always work the percentage on the cost. The depreciation figure you see in the trial balance is how much we've depreciated our assets up to now. And then we have to add on another bit for this year. So in the case, again, going back to the mock exam, for motor vehicles, we had 26,100 there as a depreciation charge from previous years. Now there's an 8,700 charge for this year. So our total depreciation, our adjusted balance for motor vehicles is 34,800. So it's just adding this year to next year. And finally, then bad debts. So bad debts, we already have a provision in the trial balance from previous years. You'll get the instructions as to what we want our bad debt provision to be, and then you just follow the instructions. So that's where we have to adjust some of the figures in the trial balance to get a true and accurate picture of the profit for this year. And then when you get into the P&L account, it's a simple formula. It's sales goes in first, then you add your opening stock to your purchases and subtract your closing stock. That will give you how much the sales cost you for the year in question. And when you subtract your cost of sales from your sales, you get your gross profit, which is the profit between buying and selling. Then you calculate all your expenses, making sure to include your adjustments in there as well. And when you have your total expenses and subtract that from your gross profit, you get your operating profit. And then after that, you calculate your interest or tax or whatever other external variables. And then you have your profit figure. Then in terms of the balance sheet, it's a simple formula. It starts with fixed assets, and then you show how much they cost, how much you've depreciated them by, and what the value is now. So we're recording the value right now. So we do that table at the start for our fixed assets. Then our current assets, which is our stock, our debtors, our bank, our prepayments, all that kind of stuff. We total our current assets. Then we look at our current liabilities, our creditors, our accruals, all the money that we owe to other people. And we add that all up. We subtract the current liabilities from the current assets to get our net current assets or working capital, whatever you want to call it. Then we subtract we add our working capital to our fixed assets, and we subtract any long-term liabilities to see how much that business is worth at that moment in time. So if we turned everything into cash, collected all our money, paid all our bills, that's how much we'd have left over at the end of the day. And then where you want to work out where that money came from, we have a capital figure in the trial balance, we have a retained profit figure in the trial balance, and then obviously we have to incorporate this year's profit because that's going to adjust it as well. So we add this year's profit to the retained profits to our capital, and then those two figures should match. And, just getting the format and the order, that's what we're looking for in question 1, that you know what a set of accounts looks like and knows where everything goes. So that's question 1. Question 2, you'll be given 3 sets of data, either 3 different companies or 3 different years for the same company. And you're given your ratios, and you just calculate your ratios and work out which is the best and which is the worst. And we'd expect a commentary on that as well. So you're looking at the numbers and you're also looking at the trends. So are they getting better? Are they getting worse? And in the example for the mock exam, it's fairly spectacularly getting better. So we see our sales are growing, our margin is growing, our profits are growing. So when a company is on an upward trajectory, that's the kind of companies we like doing business with. And if our costs are going down and our day sales are going down and our stock is going down, that shows good management on behalf of the company as well. So in question 2, you're given the data, you calculate the ratios, and then you include a commentary in terms of your understanding of it. Now, in this question in the exams, there will be 3 questions within, so make sure that you answer all the parts of the question. And again, it says, in your, what you consider or in your opinion, just make sure that you back your opinion up with facts and say, I think, the current ratio is getting better because, it was 1.0 in the first year, it's 1.1 in the second year, 1.3 in the third year. So it's getting better year on year. So just back your comments and your thoughts with facts showing where you get the information from. So that's question 1 and 2. And to be honest with you, question 1 and 2 count for 100 marks out of 140. So we mark the risk exam out of 140, and the reason for that, it just helps us to do the sums, because there's 70% for the exam, there's 20 for the assignments and 10 for the short tests. So that kind of explains the logic of marking it out of 140. So there's 50 each for question 1 and 2, and then there's 20 each for the smaller questions. So there will be 6 other questions on the paper, and you only have to answer 2 of them. So pick the 2 that you're most comfortable with. There's going to be a table, a scoring table. So if your 0, 1, 2s, that's a very easy one. There's going to be one on bad debt provisions. So that's an easy one again, if you know how to split. And just remember, specific provisions, you have to be able to identify them to a specific customer. So take an 80% of your 4-month column. That's not a specific provision because it has to match to a customer. So if you take the full 3-month column, then that can be specific because you can identify the amounts to a specific customer. Otherwise, it's just a general provision, and that's based on your past performance, and it is often fairly consistent within a business, so you need to have a look at that as well. You also know there's questions on LIFO and FIFO, and again, another fairly easy question if you know what's going on. And then obviously there's going to be a question on the cash flow cycles, which can be a bit complicated. Again, if you like it, that's an option to you as well. And finally, question 8. Question 8 is always a multiple choice question. So you'll be given a question, 3 possible answers. You pick the correct one. To be honest with you, I wouldn't recommend doing it as your 2. If you're comfortable, you want to be very good to get that question, because they are tricky and they do need a bit of thought. And even the multiple choice answers aren't sort of obvious. So you really have to know your stuff to do that one. But look, the options are open to you. And I hope that by managing your time, 40 minutes for question 1, 40 minutes for question 2, 20 minutes each then for the 2 smaller questions, and then you will get your exam sorted. So look, I hope this is a quick summary. I hope I've said one thing that sets off an aha moment. Go, yeah, now I see how that works. And again, as we've said 1,000 times, if the balance sheet doesn't balance, no panic. Just make sure all the figures are in the right place. And if you have time, then go back and see if you can find it. If not, you've probably dropped a few marks. Not the end of the world. So hopefully this will help you, and